won't be your normal. I'm like, no, okay, you're either in or you're out, right? It's a binary, it's a 1-0. You're either in recession or you're not. But it's interesting that there's so many people, and again, I was in the camp, right? I looked at the data and I said, everything except employment is down. Employment, I believe, is totally manufactured by the birth-death ratio and that nonsense.
And
So
lagging.
we're in recession. And yet, everywhere you look, things continue to rock along. And I think that's because the expansion of credit, right? Credit card debt went crazy. Consumer debt went crazy. Corporate debt went crazy. Government debt went crazy.
According to JP Morgan Chase's 2023 Mid-Year Business Leaders Outlook, fewer U.S. business leaders expect a recession by the end of the year compared to 6 months ago. Labor shortages, inflation, and competition are the short-term risks on their radar. About 45% of the surveyed business leaders anticipate a recession by year-end or believe the U.S. is already in one, down from 65% in January. The survey results show a slight rebound in optimism, with approximately 36% saying the economy will avoid a recession, and 20% unsure about its occurrence. Despite lingering economic uncertainty, 2/3 of the respondents, or 67%, express confidence in their company's near-term performance over the next 12 months, aligning with the January survey. A majority of business leaders also expect higher revenue and profits, 51%, a year from now. The U.S. economy's stronger start in 2023, bolstered by resilient consumer spending and other tailwinds, has impacted business leaders' conviction about a recession occurring this year, according to Ginger Chambliss, head of research at JP Morgan Chase's Commercial Banking Division. Mark Yusko also shares his views on market sentiments and the positive aspects of a recession in helping filter out bad actors in the market.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
And there's an argument in the debate, and others would just, I don't think we've had any inflation. We've had currency devaluation. We've had the greatest currency devaluation in the history of currency devaluations. And it was, I believe, again, intentional, under the cover of lockdowns, which I believe were part of the plan to create an environment where the MMT nonsense, the cult of Kelton, as I refer to it, could prosper. I mean, look, we created 50. And one of the things you appreciate when you go to Europe is we're just like toddlers in the United States, right? 246 years or 47 years of a republic. It's just not, the Moors were in the Iberian Peninsula for 800 years and they're gone, right? I mean, but they were in charge for 800 years. So they've been around a long time. But for 246 of the 245 of the 247 years of the US Republic, we created half the money. And then in 2 years, we created the second half of the money. We literally, out of thin air, created half of all the money that's ever been created. And I don't believe that was unintentional. I believe it was absolutely intentional. It's the only way out. When you're an empire and you become overly indebted, you have 4 choices. You can pay back. Can't do that. Okay. Even if you taxed all the wealth, forget income, taxed all the wealth, you can't pay back the debt. You can restructure it, but someone's got to take the other side. No one's going to take a worse deal. You can default on it. Whoa, can't do that because then you get kicked out of office. So you devalue it, deflate it, or inflate it. To me, devaluation is different than inflation. Inflation is when prices rise because demand exceeds supply. If there are 1,000 cars and there's demand for 1,200 cars, the price will rise. That to me is inflation. If I print $1 million and I devalue the currency by 50%, to me, that's currency devaluation. Now,
but you create a lot of demand because there's more money.
Yeah, one could argue it's the same. Yeah. It's the distinction without a difference, and that's fine. But again, I've been debating this with Mike for the last year, saying this spike in inflation, it's gone. Right by the end of this year, we'll be back to deflation. There will be no talk of inflation. We've already seen it with the commodities, and now we're going to see it in services. And then the sticky part is the owner's equivalent rent, which is a dumb thing. The rent you charge yourself to rent your house from yourself, which you would never do.
Super lagging, yeah.
Just a total. So I just don't believe there's ever been any inflation because there was a step function change in global supply and demand by this authoritarian lockdown nonsense. I used to be in the camp that recession, that we're in recession, we're going to be in a recession. This last trip, no way. There's no global recession. Planes were full, hotels were full, restaurants were full, prices were high, people were well dressed, everybody was happy. So I'm basically of the belief that we are in kind of this Goldilocks world where they're devaluing the currency at a rate. It's like boiling the frog, right? If you do it too fast, the whole experiment, you kill the frog. If you don't do it fast enough, the frog jumps out. So they actually are doing it at the right speed.
However, the outlook for hiring has become more pessimistic, with just 42% of respondents expecting to increase their headcount over the next year. Despite the labor market's surprising resilience amid the Federal Reserve's rate hikes, job growth is displaying signs of a slowdown. In June, U.S. employers added only 209,000 payrolls, the lowest rate since a decline in December 2020. Labor shortages, inflation, and competition were cited as the greatest short-term risks to their companies. Although inflation has eased from last year's 40-year highs, it continues to significantly impact pricing decisions and profitability. 3/4 of the respondents stated they are likely to continue raising prices to mitigate costs. These factors contribute to concerns about the recession and where the recession trend is heading, as discussed further in the video by Yusko.
We did have, past tense, a recession, right? Q1, Q2 of 22, negative GDP, back to back, was a recession. Now, it was a 2001-esque recession. I think total GDP last year was 0.9, which is almost exactly the same as 2001, which was a recession. Now,
adjusted for inflation. So nominally, everything is insanely hot. But once you adjust for inflation, it was,
And real is what matters, right? And so but the reason they didn't want to call it a recession was because there's, 4 things they look at. 3 of them said recession, but employment didn't. It's because they fudged the employment numbers. I mean, and I don't mean like fudge them intentionally to get around calling the recession. It's just the birth-death ratio is a bad system. It's been a bad system for years. Why they don't change it? We know, right, with certainty, because we got computers that tell us who gets paid, how much they get paid, when they get paid. We know what employment is. But yet we still use this antiquated system of saying, well, we're 36 months into an economic expansion. Therefore, this many companies should be formed and this many should die. But that all goes away in a ZERP world because the incentives are wrong. When we had negative interest rates, there was really bizarre stuff going on. 3/4 of the jobs, were mythical, and that's fine. And the other one is this whole nonsense that the administration is trying to say, oh, they're the greatest job creation president in history. Are you joking? You locked the world down, not they, but the world locked down, and people stopped working, and then they go back to work. That's not job creation.
It's base effects. I mean, it's
basically, but it's the same fallacy of hurricanes. When a hurricane destroys Florida, they don't ding the GDP. When they rebuild, they add to the GDP. That's ridiculous. But we've always done it that way. In fact, retail sales don't adjust for population growth. What do you mean you don't adjust for population growth? Of course you have to. We don't. And we're not going to change. Like, well, why? It's just this, and they have a footnote that says this is not adjusted for population growth, but that's silly. Now, maybe population growth isn't as fast as it was because of immigration laws, but there's still population growth. And the idea, or gas prices, right? So much of retail spending is gasoline. So if gas prices double, that's really not growth. I mean, you're paying more for the same gas. Why people are so reticent to call a recession? It's like recessions are not bad. In fact, I will argue recessions are really good. And people say, oh, that's horrible. People lose their jobs. I'm like,
they didn't last year.
Not all companies should exist. Not all companies are good. Just fact. And keeping bad companies alive isn't actually good for society. It's just not. And here's why I say we're coming out of recession. The number of people who lost jobs, fired, downsized, whatever you want to call it, huge. That's happened in every recession in history. And then what happens? You get massive opportunity in venture capital. I have never been more busy. as a venture capitalist, ever. And it's just like 2009, just like 2001. And those vintages are by far the best, right? 2021 vintage is going to be a horrible vintage. Why? Keith Rabois summed it up. He said, yes, we've all lost our minds and valuations are too high, but you go first. You skip this hot deal by saying the valuation's wrong.
According to Treasury Secretary Janet Yellen, the U.S. recession that some economists have been predicting for the past 18 months or longer might not materialize after all. Yellen expressed confidence that the combination of a robust jobs market and cooling inflation indicates that the world's largest economy won't suffer a prolonged slump. Despite the Federal Reserve raising interest rates, unemployment has remained below 4%, although GDP growth was estimated at 2% in the first quarter. Yellen's positive outlook aligns with the increasing hope among economists that the U.S. will avoid a recession, even with inflation remaining high in other parts of the world. President Joe Biden has also downplayed the chances of a contraction. However, Yellen did caution about a potential threat to global and U.S. growth, pointing to China's economic slowdown. As the world's second-largest economy faces deflationary pressures and youth unemployment, it could have negative spillover effects on U.S. companies heavily reliant on Chinese customers, such as Apple and Nike. Feel free to share your thoughts on what you took away from the video in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.